let's talk about a very interesting note that has come in from none other than Surendra Goyal of Citi India Strategy, and one of its kind. The buzz in the town, or the buzz on the D Street, the Lal Street, has been that what happens when the yield will rise and what does it mean for Indian equities. So that is one of the debatable topics, especially when the US yields have gone up. So Citi rate strategists have gone ahead and increased their global yield targets further. That is what they have done. In fact, even in the markets, you've seen a little bit of increase as far as the 10-year yield is concerned. So what Surendra Goyal has done is that looked at the PE ratio of India, and in the past, when essentially yields went up or rates in the system went up, what really happened. So the conclusion is that India's PE multiple has not shown much correlation with US yield, particularly in the recent years. Flows get impacted only when the USD strengthens, or the dollar index as we call it actually goes ahead and strengthens. IT and pharma does very well and did well in the post-taper tantrum world, and staples was actually the underperforming name. In fact, FMCG staples, what happens to inflation is something which is keep bothering overall the FMCG space as well. Now, key takeaways for India is that India's PE multiple has not shown any significant correlation with yields over the recent years. Other variables have possibly played a very bigger role, or a much bigger role. PE is a function of a lot of other variables. USD is more relevant, or what happens to dollar index. Foreign flows get impacted when the USD, that is the dollar index, goes ahead and goes up. The DMF flows offset it in the last cycle. However, if USD strengthens, remember USD has been on the weakening side, dollar index has been in and around 90, it could be a challenge for the situation, considering that the domestic flows are also weak, is what Surendra Goyal adds. However, MSCI value has outperformed MSCI India growth stocks over the last 2 years meaningfully. However, India growth has outperformed value in 2030. IT and pharma during this situation goes ahead and does well, and as we told you, staples is something which does not do well. That's what the Citi strategist has said. Just to summarize really what to watch out for, how to approach this entire yield thing, he says that from an India perspective, they would continuously watch out for as far as USD strengthening is concerned. If there is a strengthening in the USD, then it could be a problem, or it could lead to FII flows, which have been the big driver of the market, almost 22 billion in the past 4 months or since the US election that has happened. Any reversal that could lead to a derating event, especially in terms of PE. Valuation for the Indian markets, according to them, are at 21 times 1 year forward, and that could change if there is a trigger as far as flows is concerned. But at this point of time, they do not really see these changes happening. At this point of time, they do not really see what sort of any sort of changes just because the yield is going up. But it will be interesting to track the dollar index. That's what they say. 22 billion has been the flow as far as foreign equity investors are concerned over the last 4 months. Any change could lead to a sort of PE derating for India, which is trading at slightly high valuations.